Hey, Jordan.
Hi, Varsha. Think we're going to have some folks start to join here. See. For anyone that's joining, let us know if you're a sole proprietor, S Corp, LLC, what you do, where you're from. I don't know if we've had anybody else join yet. Looks like there's 3 participants. We've got a few more minutes to start letting folks in.
A lot of people from LA.
LA's cool. Been to LA many times. All right. So I think that we can go ahead and get started. We have a lot of people from LA. I don't know what everyone from LA is doing, but I do know many people that live and work in LA, and they do a lot of 1099 contracts, gig work kind of stuff. So that's really cool, and I can totally relate to that. That's for sure. So I think that we can go ahead and get started. We'll give it 1 more minute to make sure everyone is on, and then we'll start from there. But yeah, let us know where you're from. And sometimes where you're from isn't where you're at. Let us know where you're at and what you do. And if you have any questions, put questions in the chat. Yeah, looking forward to going over some of the differences here today between S Corp and sole proprietorship and LLC and all that good stuff. All right, let's see. All right, we'll go ahead and get started. Does that sound good, Varsha? All right.
Yep, let's get it started.
Okay. Hello, welcome everyone to Tax Talk with FlyFin. My name is Jordan Kimball, and I'm a realtor, event host, social media influencer, business owner. I wear many different hats. I enjoy all of it just as much as the other. Today, I'm joined by Varsha. She is an expert CPA, absolutely brilliant, so knowledgeable. FlyFin is the leading AI tax service for 1099 workers. So if you happen to be a self-employed 1099 worker, this is the right webinar for you, and Varsha is here to help. Varsha, go ahead and tell us a little bit about yourself. Welcome, and just give us some of your experience.
Sure. Hi, Jordan. First of all, how are you doing? How has your day been?
It's been good so far. I had a little bit of barbecue for lunch. I enjoyed that. I don't do that very often, but it was pretty good. And I'm so excited to see you again on another webinar. And I know you've got a lot of info for everybody.
Sure. Yes, that I do. So hi, everybody. I'm so happy everybody's here today and have joined the webinar. I'm Varsha. I'm a qualified US CPA from the state of California, and I'm so happy to welcome you all. And here we're trying to talk about the major questions that we get day in and day out. And I have worked in Big Four before. I do have a decade of experience handling taxes and its implications, filing returns and what have you, right? So, and I do specialize in 1099 taxes. So I think this is going to be a good session because I do have real life examples, like people asking me stuff and people getting into trouble or not getting into trouble. So I think it's going to be a good session, Jordan.
You're so modest. I mean, what you know and what you do is so much beyond that, but that's okay. We'll let you off the hook with that, and you get to show off with all your knowledge in this webinar here right now. So for today's tax talk, the main question we're going to be answering is, do you need an LLC or S Corp to maximize tax savings? Now, we're also going to go in and talk a little bit about the tax implications. Both of these, to me, are as important as the other. We'll also be looking about how to choose the right business entity to maximize your tax savings and some of the risk and reward to all of them. And, it's not a one-size-fits-all deal. We all have different circumstances. And Varsha is going to help clear that up and kind of just give the fundamental definition of everything and then break it down as to when you need to switch and all that stuff. So, and also stick around until the end. We have a huge surprise for all of you watching. This is going to blow your mind. So make sure you watch until the end. Varsha, are you ready?
Yep, sure. So I think, Jordan, you were asking me about the basic definitions, right? I think that's a very good place to start because sometimes we get too caught up on complicated stuff, this rule and that rule, and we really do not focus on the most foundational things, right? So I think I would like to call sole proprietorship as just an individual who did have a hobby but now thinks that, oh, it's turning into a business and is just doing this on the side, or maybe just that single person starting to doing it slow and steadily, and no not that much of a risk, just one person running the business right out of a garage or their attic or things like that. So it's not really like a registered business at this point, but it's just that they are getting some other source of income apart from their W-2 or like their employment and interest and dividends, stuff like that. But when we talk about LLC, on the other hand, this is when it gets a little serious because you start registering yourself with the IRS, you get an EIN, and you start to think of having employees, and you feel like, okay, now my business is growing. I need to keep my business separate from my personal, and you want to have that distinction in your mind, right? So that's when you start thinking about an LLC. And now you're like, oh my God, I have this LLC, but I'm paying so much of tax. Like I'm paying self-employment tax, I'm paying normal tax. What is my way out, right? So that's when you move to something called an S Corp. An S Corp is something that would help you save taxes, save self-employment taxes, basically. But like I said, the switch is not very easy, and it's not that everybody needs to go there because I mean, we'll get into why it is advisable and why it's not. But what I'm trying to say is S Corp is again a more tax beneficial entity.
Okay, awesome. So it's more beneficial as we're kind of like on a ladder here and we're going up, we're growing upward and outward, and these things become more beneficial the more you grow, essentially, is kind of what we're saying. Okay. Well, it's good to have those fundamental definitions, and it's a good baseline to start and understand, because now all the viewers, all the watchers can kind of hone in on where it sounds like they're at and use that information now from the definition. So thank you for that. Super helpful. Now to start, let's tackle sole proprietorships. You've already explained what they are. Can you tell us the pros and cons from a tax perspective?
Sure thing. I think yeah, the main goal of the webinar right here is that let's try and break down each entity and see what are the pros and cons of each entity and what fits your situation, right? So that's what Jordan and I are trying to do here. It's not like a blanket answer for everybody, but it's asking or prodding you to ask the right questions to yourself so that you can take a decision, right? So when I talk about sole proprietor, like I said before, it's really not that organized. It's really not that structured. It's just right out of your basement, like I said, and then just you running the business. And right here, the con is that though you do have the flexibility, though you do not have to pay a lot of license fee to the federal or the state government, the con is that your personal and business is not yet separate. You know what I mean? Because let's say you have a business loan that you default on. You have a lot of interest to pay on your business loan. Your personal assets are still at stake. They can still be seized. And if there is a court proceeding and say you're losing the case and things like that, your personal things are at stake and there is no clear distinction, like I said. So that's when sole proprietorship gets a little tricky. And this is not that advisable when you're growing your business at a large scale. Say you're making like 100K, 200K year on year, and you're still being a sole proprietor. It's going to get really messy for you at this point in time. And that's when you should probably start thinking, hey, I think it's high time for me to, differentiate my personal and business and start protecting my business and my personal assets and treat them separate. So, I mean, that's where I'm getting at, Jordan.
Okay, so LLC is mainly, you're still going to pay the tax, and you may be more deductions may be available through LLC, but that really, really key component is the protection and that separation of personal and business, which is definitely, once you get higher in income, you want that protection. Totally get it, loud and clear. So, that's really helpful. And so we're talking about sole proprietorships, LLCs. I think LLCs are the most popular topic, and it's the most asked question. Do you want to talk more about LLC and moving up from a sole proprietor, and like you said, when that is and what you're protected from?
Sure. I think you'd also acknowledge that we are like in the heat of the season, tax season, and people are like frantic about filing taxes. And just the other day, I had 5 calls that I had to take, just talk to users one-on-one. And I would say at least 4 out of 5 users were like, hey, now I'm an LLC, but I have no idea what to do or what even an LLC means or how are my taxes going to be. So I think it's very important for every taxpayer to know what structure you're getting into. Now, when I talk about LLC and I say limited liability company, your personal assets are totally protected. Like, let's say you do default on a business loan, they cannot take your house or your personal asset, your car or anything of that sort, right? So there is a clear demarcation, but at the same time, you will also have to file a business registration document with the IRS, get an EIN, have a name in place. And there's also a thing called a business code. A business code is something that also, when you put in your tax return, say for example, Jordan, you're in a healthcare industry, right? So the moment you put that code in your tax return, it also helps you figure out deductions and also what's relevant for you, and if there are any credits that are available, that's easier to follow through and streamline. So things like that, that's what I mean by being more structured. And when you have an LLC, you are maintaining a separate business card for your expenses and separate card for your personal, and that way you have you have a clean sheet wherein you say, even if the IRS comes back and it says, hey, so I see that you went to Walmart, how do I know you're buying groceries or you're buying business appliances, right? So things like that, you're very well, equipped to say that, hey, this was my business card and this was a business supply for me. So LLC gets a little complicated in the sense that you do have certain steps to follow through, file your tax returns on time. That's there with the sole proprietorship as well. And in LLC, you get all these deductions under Schedule C, wherein you start with rent, your home office. A lot of deductions like that. And also the other thing is, once you're in LLC, you get these varied options to become other type of entities, which we will cover next. But I'm trying to tell you, it opens doors for you to become a bigger organization and a better organization overall.
Right. And it makes the paper trail a little easier to follow as well, to say, hey, this is when I get paid, and you're paying yourself from the LLC, and you know what that payday is. You typically know what that amount's going to be, and it allows you to really structure yourself. And it actually makes you, in a lot of situations, more qualified to take out business loans and things, because it's easier to manage the ability to show income from being self-employed or to being a business owner, or et cetera, et cetera. So especially like, with PPP loans, sole proprietors that took out PPP loans and then asked for forgiveness, they were asked, okay, did you pay your employees? Well, I'm the only employee. And it went to my bank account. Okay, can you show us how you use those funds? So like you're saying, protections are great to have, and setting yourself up to where it's easily managed is super helpful. And by the way, FlyFin does a great job of helping you with deductions. Let's say you're a gig worker and you're not just in like the medical industry, you do other things as well. It helps you get those deductions and expenses sorted out in folders and files. So that's super helpful, Varsha. We appreciate that info. Just a reminder before we move on, make sure to stick around till the end for a huge surprise coming your way. You don't want to miss it. So moving on, we got a question from Michelle, who asked, how do I choose between an LLC and an S Corp? And I think the answer of this one will help a lot of people watching. Can you help us with that, Varsha?
Sure. I think let's also talk about what an S Corp is briefly, Jordan, just so that we set a context and then like sort of I will take up Michelle's answer. So S Corp, like I said earlier, so it's not like a separate entity altogether. An LLC can be an S Corp. You just have to make that S election. So it's not that, oh, LLC is a separate entity now, and when I become an S Corp, so I have now an LLC, S Corp, personal, what's happening? So it's not that way. So let's say you do have an LLC, you choose a form called 2553, you file that form, and then you say, hey, I want to be treated as an S Corp from so and so date. And then you do the S election. And from now on, you are an S Corp. And what does an S Corp even mean? So it's actually called pass-through entity, right? So when I say pass-through entity, that means there is absolutely no tax at the corporation level, at the entity level, and then everything flows through or passes through to the personal tax return. So like to give you a comparison, Jordan, let's say it was just a normal corporation, a C corporation, right? You're not an S corp. You did not make the S election. You're going to be paying a corporate tax, and you're also going to be paying individual tax, right? But when you're an S corp, that's just halved right there. You're not paying the corporate tax, you're just going to be paying the individual tax. And what's the other benefit is that when you're an LLC, you're paying normal tax and a self-employment tax. Remember when I said on the profit income, you're still paying the self-employment tax in an LLC? In an S Corp, you do not have to pay that self-employment tax. All you have to do is just pay your normal marginal rate tax, right? So I know that it all sounds so rosy right now. Oh, so then everybody should be an S Corp, right? Um, but no, there is a catch here, because when you are an S corp, your losses start getting treated as passive loss. And what I mean by that is you cannot just set it off with every other income that you have. However, when you were an LLC, it was not a passive loss, and you could have even set it up with, set it off with a W-2 income or a capital gain income, right? So there are flaws that come along with it. And even when you're an S corp, like say for the state of California, I see a lot of people are from Los Angeles, places like that. So states of California, they have something called a franchise tax that you need to pay. So that's about $800 just because you are an S corp, right? So things like that. For an S corp to be maintained, there are more stringent regulations. Say that, hey, you can only have up to 100 people. And it also says that, let's say you do make an S election, you have to be very, very diligent when you file your taxes. You cannot, even afford to make a mistake there, because if you do make a mistake on your S Corp tax return, like it's going to affect your personal tax return. Why? Because both of them are interlinked. Like I said, the income flows through your S Corp to your personal taxes, right? So this is just to give you a background on, like what an S Corp is and how is it different from LLC and a C Corp. But the question that you asked was, can you repeat that question for me, Jordan, please?
Of course, yeah. So Michelle asked, how do I choose between an LLC and S Corp? And I think, Varsha, you've kind of suggested before that if you have more employees, a higher count of employees, S Corp is more beneficial.
Exactly. And also, let's say that you do have a lot of losses, like say you did not earn a lot of income and you had losses for that particular year, it'll be better to stay an LLC, because when you can now set it off against your W-2 income, right? But the minute you become an S corp, you're not allowed to set it against your other income, and you can only set it off against the same income. Say, let's say from your, construction business, right? So let's say you have loss from a construction business, you have an S corp, you can only set it off against the construction business income. But let's say you also have an employment on the side, you cannot set it off against that income. But for an LLC, that loss can be set off against the employment income, right? So it's all about asking the right question to yourself. First of all, am I making a loss? Am I making a profit? If you're making a profit, and if it's substantial amount of profit, that cannot be doubly taxed in an LLC. Like you don't want to pay your self-employment tax, you don't want to pay your normal tax, go ahead and do the S corp. But if you have a lot of loss and you're like, I need to set this off with some other income, then LLC is your way to go, right? So that's what I mean. Like, it's not going to be a one answer fits all situation, but it's all about asking, hey, where am I at this position? And also, Jordan, the one other thing that I've noticed is that people always think about, okay, how do I get into the structure? One point that everybody needs to keep in mind is also your exit strategy, right? Have you ever thought, okay, if I am going to close this business, what are its implications? Because the entrance is not the only complication for taxes. Even when you close down your business, you need to know whether, if you're a sole proprietor, like I said, your personal assets are at stake. If you're an LLC, can you take all the capital gains? Can you take all the losses? And if you're an S Corp and then you have a lot of losses, you cannot even set it off because you don't have another year, because you're closing down your business. You don't have another year to set it off. So what are your exit strategies, right? So these questions need to be pondered upon, and people can reach out to CPAs like us and understand what fits their situation. So just don't think about the short term of 6 months or 12 months. Think about the next 5 years. Think about the next 6 years, how you're going to run your business. Are you running your business to sell it off, to spin it off, to grow it? You need to have that long-term vision in mind when you make a choice of moving to an S corp. It's not that easy. I know.
No, it's not. And, but our situations don't make it any easier either, right? There's been so many successful businesses that started somewhere that, with the hopes of them taking off, but without the certainty. And then it does. And you've got to change, your game plan as you proceed forward. And there's folks too that think they want to retire and then end up picking up a hobby and it turns into a business and they go, well, how about I do this the next 6 years and then I retire? And then do they want to get an S Corp? Do they, and those are the decisions. And so it's all these different situations, and that's very insightful. I'm sure it's very helpful for the watchers here. We'll go ahead and move on to the Q&A part now, which I'm sure most of you watching are excited for. The Q&A is the best part. All of your really great questions get to be answered. We have some questions here that you guys have submitted, and Varsha will answer them. The first question being from Gabrielle, asking, does the loss of a tax year carry over onto the next year if you make a profit in the next year? So she's asking about the loss of a tax year carrying over into the next when she's making a profit. And then she said, I'm not sure I worded that right, but I'm pretty sure we've got you worded it fine, Gabrielle.
Yeah, I think that was worded right. I think I did lightly touch upon this topic before when I said that, when you're carrying over your losses, you can also set it off against the next year's profit. Yes, it is correct. And you can do that with both an LLC and an S Corp. But the difference is that for an LLC, you can set it off with any income, right? W-2, capital gain, interest, dividend, any. It doesn't have to be the same business. But for an S Corp, that's not the case. If it's a passive K1, the K1 is something that you get off of the S Corp and you have losses over there, you can only set it off with the income from that business. Now, let's say you had zero income from the business. This loss cannot be set off with your employment income. So that's where you need to be extremely clear in understanding, hey, so should I be an LLC? Should I be an S Corp? Yeah, that's the difference, basically.
Okay, we've got another one. I hope Gabrielle had the question answered and understood, because I think you did a great job. It was very helpful. Nicole now is asking, what types of deductions are available when you work out of your home? So I know you're an expert, obviously, on all tax savings, but this is one that I've heard you talk about a lot. Can you help Nicole out with that?
Yep. I think when you're working out of your home, there is a lot. I mean, with the advent of COVID and the IRS also recognizing people working from home being to a large extent, there are a lot of home office deductions like the rental portion that you can take, the utilities, right? Like say, so how do you also differentiate the home office portion is, let's say your office portion is 100 square foot area out of 1,000, then you apply a percentage and then you take the rent, your total rent, put that percentage, and then take that as a deduction, right? So rent, utilities, and also not just that, you can also even, just take the desk that you use for work the space that you use for just for work that you can take as a deduction, the desk itself, the furniture that you buy for your business at home, business supplies. Like I can keep going on and on. But like I said, everything needs to be linked, which they need to be ordinary and necessary for your business, not just anything. Like I said, I mean, there are a lot of deductions, but you also need to know where to draw the line. Like you cannot be like, hey, I'm going to take my dining table as a deduction because I work there at times, but then like I also eat there. So, I mean, you cannot push that to that extent because you're also using it for your personal, right? Like, I mean, your family eats there, you eat there. I get it that you work there, but it's not the place where you solely use for work, right? So it needs to be some place where it's a dedicated space for you to work. And it does not need to be a separate room. It could be just a corner. You just make sure it's just used for your work, right?
Awesome. And I know that there was a rule on the square footage that you can deduct. Is that right?
Correct. Correct. Like
Okay.
like I said, I mean, just say, like 100 square foot area out of 1,000, take that percentage off of your rent, things like that.
Okay, and that's very helpful because a lot of folks are working remote and they have never worked remote before, and now they're self-employed or what have you, and that's a big question, very popular. So now we've got Meg asking, well, she's stating something and then asking. So she's saying, I'm a 1099 sales representative and also have a rental property. Can it be put into the same LLC or S Corp?
Okay, so I think what Meg is trying to say is that she has two different businesses, right? Because she
Mhm.
says sales and marketing, and then she talks about the rental thing that she has. So I think, Meg, the best thing to do for you is to create two separate LLCs because you do not want the expenses to overlap or you not having a track of that as well. And it's always advisable to get a different EIN for your first business and then a separate EIN for the second business. So how it would work from a tax return perspective is that you would have two different forms, a Schedule C for this, a Schedule C for the second business, and you would need to keep them separate. So I think the correct thing to do, and like I said, Jordan, if you remember before, I told you that there's a business code for every business you're into, right? So the sales and marketing is really going to have a different code, and then the rental is going to have a different code, and you cannot really merge them into one. So I hope that answers, Meg.
Right. It sounds like Meg potentially may sell real estate and also has a rental income, which still are two different business codes, and one has a different set of deductions than the other as well. When you're a landlord, it's a totally different ballgame than selling real estate. So again, FlyFin can totally help sort that out, and it is helpful, I think, like you're saying, Varsha, to keep that organized and to have two different business entities for that. So we appreciate those Q&A answers, super helpful. And there's so many unique situations. I love hearing the Q&A questions and hearing your answer because, a lot of these we can relate to in one way or another. And it's just, it's so much fun and so fascinating to hear the answers and the little tips that you provide to help everyone. So now it's finally time for the special surprise. I'm super excited to tell you about. Here it is. Activate a completely free, let me rephrase that, completely free 7-day trial today using the same email you used for the session. So take that email that you registered for this with, and you'll be getting a free 7-day trial today, get an additional $650 worth of services. This is a one-time offer only for people who registered. You seriously don't want to miss out on this opportunity. It's going to come with features like access to a tax planning session for 2023, exclusive review of your deductions by CPAs. It's a huge plus and feature, and an ultimate tax guide and a lot more. So if you enjoyed this webinar and found it to be informative, so would an ultimate tax guide prepared by CPAs, and there's so many other things that are featured in this and that you'll definitely find useful and very resourceful. For people who are joining from Instagram, the link in the store, use the link in the story to register and submit an email, and we will send you everything from there. There's lots of details and things, but that value is huge. And so is the value from Varsha's answers today. So Varsha, we certainly appreciate you answering everyone's questions. And, I love to see everybody working hard and starting businesses and being successful. And even if you had a loss, there's that opportunity to, go forward and not stop and keep pursuing your dream and your happiness. And I love that. So thank you so much, everyone, for joining and asking Varsha questions and just having me tag along and get the answers from Varsha for you. Thank you so much. We appreciate you joining.
Thank you, everybody. Bye-bye.